you ever wanted to know how to trade the market open, the first 30 minutes of the market open, and specifically an opening range, this is the video for you. I'm Pat Mitchell. I've been a professional day trader for the past 11 years, and I'm here to bring you high-level professional day trading education, all here for free on YouTube and on X. And tonight, like I said, we are going to be going over a specific trade that I took, as well as going into a deep dive on how to trade that market open. So let's rock and roll. Give me one sec here, folks. Gonna get my charts ready. Okay, so hopefully you guys all had a wonderful long weekend. Very long for myself. It just seemed extremely long. And now that we're into the charts, let's get into it. So it was a really nice day back. And the very first thing that I want to talk about is how there's a lot of traders. There's this misconception about the market open being risky. So let me explain to you why, in my opinion, it is not risky. You're actually saving risk on this, okay? The only thing that we can control as day traders is our risk, right? That's the only thing. So it is up to us. It is our responsibility to do so. So trading that first 15, 20, 30 minutes of the market open, I want you to think about it like this. If you walk into a room and there are 5 people there, 5 men and women, doesn't matter. They're in that room. And it is a competition between you and them. So 6 people in total. It is a 1 in 5 chance that you will be top. Okay, so let's put it like that. Now I'm going to give you another example of another room. You walk into a room and it is like a coliseum. There is 20,000 people there. Which one would you rather have? Where are your odds better suited? Well, the one with only 5 other people in that room, right? So let's think about now that in the context of trading and the stock market. The stock market at the market open, generally speaking, that's when institutions are getting in and out of positions, as well as retail in and out of positions. Okay, so they're clearing their positions if they're getting stopped out and so on. But it's a small amount of traders. It's heavy volume for that first couple of candles, and that's what throws people off. But you have to look at it from the macro, not the micro. Look at it with a wider angle lens. You're only dealing with a small amount of the population of the trading community. Okay, that's it. So let's talk about people and put it in the respective variables. As traders, we need to understand, and not just traders, any professional in any capacity always understands the variables and potential outcomes, okay? And that's what I'm getting at. When you know that there is a small amount of people, that basically equates to a small amount of potential outcomes. Generally speaking, and just off the top of my head, there are about 6 different variables, 6 different ways, and 6 different things that can happen at the market open. Now, in this video, I'm not going to go over those. I go over those with my members. I'll do a video in the future for you guys soon, okay, where it comes to those specific variables. If you understand those 6 variables, you have it licked, because there's literally nothing that the market can throw at you that you wouldn't be prepared for. The only thing that could possibly happen that maybe you wouldn't be prepared for is massive catalyst. But we don't think about these massive catalysts, because that's like being afraid of walking in an open field while the sun is shining and there's one little cloud up there, thinking you're going to get hit by and struck by lightning. What are the odds of that? Now, it's probably, there is a chance of that happening, but we're talking 1 in a billion, right? Well, we don't work with 1 in a billion odds as day traders. We work with odds that we can control and odds that are in our favor. That's all this boils down to. Now, I promise you, we're going to get into the charts here in a minute, but I'm giving you that context to set the tone for what I'm going to show you, because all of this is super important. A lot of people focus on just the act of trading, the execution of a trade, and that is such a small portion of this. That's what I've been telling you guys on this channel for the last 8 years. It is a small amount of what is actually necessary. It is the preparation and the mentality and emotional control that matters. The execution of the trade is very minimal, okay? It's not that difficult. In fact, it's a lot easier than what people think it is. So it is about the controlling of variables. Let me get back on track now. So when we have a handful of variables, those 6 variables, okay, when you go past that first half an hour of the market open and even push it to 45 minutes, an hour after the market open, that is the max I will trade. And it is so fucking rare that I would actually execute a trade at that 1 hour mark. Why? Because as traders are starting to come into the market, you are increasing that basket, those 6 variables. Once you exceed that 30 minutes, and these aren't exact numbers, this is just that 6, there are 6 variables, okay? But then it goes to 8 and 10 and 12 and 20, and then it starts going exponential. When you start reaching around noon, 1 o'clock, 2 o'clock, you're looking at literally thousands and thousands of variables. There's no way to control that, guys, okay? Now, I'm not saying that there aren't opportunities late day. There are. I've got lots of videos. I have a 315 play that if you're paying attention and you've been watching my channel, it is a banger of a strategy because it works. I've done this for over a decade doing this. It works. But that market open, that's where your odds are. Do not be afraid of that market open. If somebody tells you that the market open is risky, please take my advice and run for the fucking hills. Get away from that person immediately. They don't know what they're doing and they do not know what they're talking about. This isn't what I'm saying right now. This isn't personal opinion. That is fact. There is not a professional, a legitimate professional alive that is in this that doesn't understand variables. If they have any weight whatsoever, they understand that more traders equates to more variables. You want to limit those variables. Again, variables, when we can control them, that minimizes our risk. Do you understand? That's all it is. This isn't rocket science. It's actually quite fucking simple. But you need to think about variables. Most traders are never thinking that far ahead, and that's why they're chasing their fucking tails for years and years and years. It's because you're trading at the wrong time of day. You remember how everyone always says time of day is important? Well, that's why. It's not just, I'm not going to just tell you, oh, time of day is important. The stock market open is the best and move on. This is why that stock market open is your best fucking friend. Okay? So now that this has been explained and you understand why and what that basket of variables, maybe not what those variables are, it's irrelevant in this video. Okay? We'll get to that. But let's go over these charts. I'm going to explain this trade and why it was a pressure trade. Pressure meaning size. I can elevate the size of my position because of what I'm about to show you. So pay attention. Okay, so let me blow up because we were working just with SPY this morning. I'm going to explain something. I want to point your direction to this trend. So this pink level right there. Oops, come on, bitch. So this pink level right there, okay? We also have this gap fill. Remember, we opened right here, okay? So we opened there. Right here is where we opened. This is that trend. This is that level, that gap fill. Now I'm going to wheel the chart back. We also have this blue level right here. You might not be able to see it. It might be a little faint on your screen. That blue level is the opening price of pre-market, okay? It is, I keep losing connection. DOS is being a real motherfucker today. And then we have pre-market highs. So let's count. Let's make this really elementary. We have 1, 2, 3, 4 levels of resistance. We are opening up below 4 levels of hard resistance, okay? That's important. So when the market opens, right there is where it opened, and it pops up, it is next to impossible. The only way that it can break through, do you see how it broke through later? Do you see here how it finally broke through and it disrespected all of those levels and came into that next upper level? Well, it cannot do this from here to here at the market open when there are 4 levels of resistance in its way. For it to do that, there would have to be a massive catalyst. Now, remember what I said before. We don't think in terms of massive catalyst because that's rare and special. The odds of that happening are very minimal. So we never think like that. Remember, we don't think that we're going to get struck by lightning on a clear blue sky day with one cloud. You understand? So when the market opens and we have those 4 levels of resistance on the way up, we can pressure in. That opening range, and this is why it ties into opening range. This might be a little bit different of an opening range lesson than you're used to. I'm giving you the hows and whys that opening range opens and moves the way that it does. When you have these levels of resistance, there's multiple trades that you can take. So market opens up, pops up into trend. You start in, which is what I did on those first executions. And then do you see how it kept going after it pulled back? So I locked in. I made money there. Okay. And then after that, it then pulls back, holds, and pushes again. Where did it go? Well, look where it went. It did not exceed that 4th level. It's right into it. It almost top ticked it, and then it pulled. That is natural. That is the natural movement of these stocks. It's like you need to start looking at support and resistance as physical brick walls and brick floors. Can you run through a brick wall on the first time you try? No, you're going to bounce off of it, right? Now, if you were to mash yourself into a fucking brick wall 1,000 times, you might start to break down that wall, right? Makes sense. It's the same thing as these technical levels. Those first tests, you're always going to get a reaction. Now, I'm not saying it is a big reaction, okay? Don't get my fucking words twisted here. Listen to exactly what I'm saying. But you will get a reaction. Upon that reaction, that translates to profit if you can exploit it the way that you need to. It's not rocket science. It really isn't, guys. Think in terms of your day-to-day life. The problem is when people are looking at these charts, they're making these charts out to be something magical and special and like a unicorn. It's not any different than your day-to-day life. These technical resistance and support levels are physical. You have to look at them like physical brick walls and brick floors. You will get a reaction there. You cannot just punch through a brick wall. Now, instead of running into a brick wall, let's talk about punching through a brick wall. And I want you to think about a real physical brick wall in front of you. Now, with enough force, you are able to punch through that. Now, you might break your fucking hand, but you will get through it. That's catalyst. When you're able to punch through on first tests like that, that is catalyst. Don't get it twisted about catalyst and technicals, okay? This is what I've talked about for the last 8 years about knowing what type of fucking trader you are. Define yourself as a trader. I am a technician. I'm a technical trader through and through by every definition of that word. That is all I focus on. And I'm trying to stress these words to you for a reason. Too many times I've seen traders out there that they're technical traders, they're news-based traders, they're fundamental traders. They look at fucking balance sheets. They're looking at news scanners and using scanners. What kind of a fucking trader are you? Do you understand how fucking stupid that is? Let's go back to variables. If you focus and master one thing, okay, that one thing, technicals in this case, if that's what you focus on, that's what you know. And you know that like the back of your hand. We don't want catalyst. A lot of people will chase momentum stocks or news stocks, stocks that are up on news. Don't do that. If you do that, you're going to get fucked. Because once catalyst comes in, one of the reasons why it's so fucking crucial to your success that you don't fuck around with that, that starts bringing in variables. What was the variable that I gave you at the beginning? People, right? Traders. When you have too many eyes on one specific stock at one specific time, if you think that's easy and that's like shooting fish in a barrel, you're looking at it completely wrong. We don't want that as technicians. Technical-based traders want pure technicals. Pure technicals, and I've done this again for the last 8 years on this fucking channel, is explain to you pure technicals. That's why I think some people get confused when they're watching and seeing the amount of consistency that you see on this channel. It looks like something you've never seen before. But what a lot of people don't understand is I am a pure technical trader. 99.9% of all traders that call themselves technical traders, they're not. Because they're looking at news, they're looking at numbers, they're looking at Yahoo Finance and all that fucking shit, and it muddies the water. I eliminate as many variables as possible and just go after pure technicals. So from a pure technical basis, sure, if you introduce catalyst, you can punch through that wall upon first test. You cannot punch through 4 fucking physical brick walls in a row without a reaction. And here's the beautiful thing, guys. And I'm going to go over this trade one more time for you and really explain it, because I really want you guys to be able to understand this. So let me zoom in a little bit here and really stretch it out so then we can really see it. It's kind of hard because, so instead what I'm going to do is I am going to draw that technical level there. And then we can see our other ones. So like I said, that market opens, comes up into the first level of resistance, which is that trend. It slices back, pulls back. If you see that, do you see how it comes up and retests it? Next candle opens, dips, pushes through. Comes into the next level. It stalls. Pushes straight up into that level. Do you see how many times it pushed and pulled and pushed and pulled and pushed and pulled before it reached this level? At first glances, when you look at this for an untrained eye, you might look at it and think it went straight up into that level. It didn't. It tested every one of these technical resistance levels, and you got a reaction there. Some reactions were bigger than others. That first reaction was plenty big. That's plenty big. If you take a look, the high of that is 679.47, and it pulled back to 678.79. Well, that right there is almost 1 full point. You got a full point to play. Trading options, it's a huge percentage. Next time, as it comes up, so I'm going to clean up this chart. So as it comes from lows and comes all the way up, even though there is a little reaction here, comes all the way to here. Who cares if it does? You're risking this level. If it were to get above that and confirm higher, breaks the high of that, it confirms, you would stop out. And that's fine. It would be a loss, but it can now do one of two things. Let's talk about some of those variables. It can only do one of two things. Either it pulls back to here and retests, or it pushes into the next, which is perfect. Then we have our next trade. It is a reset trade. And what I'm trying to explain to you is, even if you do get stopped out in these trades, guys, stop thinking it's the end of the fucking world. Like, if you're that fragile of a person, you're fucking doomed as a trader. Who gives a fuck if you take a loss? Like, do you think for a second that you're going to get through this career without a red trade? So why are you making such a big deal about it? If you're trading to strategy, that's all that matters. Because it's not about a red trade or a green trade. It is about the act of executing your strategy and managing that position to the best of your ability, and that is it. If you can do that, you have this shit licked. But opening range, to take it back to opening range, when you have protection of multiple levels, execute that fucking trade. Execute that trade and work that trade plan. And that's it. If it dipped at the open, so instead of pushing, it pulled, I would execute this and risk off of this. It looks like it's a far ways away. It isn't. It's a hair over a point. It's like $1.20 a share on a fucking almost $700 stock or ETF. Who gives a fuck about $1.20? Market opens, it dips, it comes down, start in here on every wash. Take advantage of that and work it into this. If it doesn't hold this, it will hold this for the exact same reasons and the way it moved here. That opening range, whatever it wants to do, just let it show you what it's doing. Don't guess. Wait for information to come in and watch those resistance or support levels. It's honestly that easy. There's nothing difficult about this. You are making it difficult. Stop making it difficult on yourselves. Easy peasy, guys. Honestly, this is when you define yourself and you hone in on one thing where technicals have the least amount of variables, okay? You have it licked. Once you start introducing news and numbers, stop worrying about numbers. All of that is manipulation anyways. It doesn't matter. I've proven that live. In the market, live, I've proven that. It's pure manipulation. It doesn't matter. Those numbers that come out are fucking fugazi, man. They're bullshit. It doesn't matter. It's already predetermined, and you can see that when it's moving. Because right into those numbers, it will sell off into a far way, thinking, oh man, there must be bad numbers coming out. Guess what? Once those numbers come out, it flash dips down into that support and ramps from there. And vice versa on the short, guys. It's not rocket science. When you understand that the market is manipulated and rigged like you all fucking say it is, then believe it. Right? There's so many things I can show you guys if you want, if you're paying attention, right? If you're not getting hung up on stupid things like, oh, what do you think of George Floyd? Like that fucking retard the other day. Focus on what's important, because it's not just money. This has nothing to do with money. This is your fucking freedom, man. This is your way out. And it gets really fucking good. So if you want to learn how to come do this like a professional and someone that can actually show you how to do this, that's been doing this over a decade, come to tricktrades.com. There is a holiday sale going on right now. Take advantage of it for new members. Do it up. Now's the time to do it. Don't say, I'll start in the new year. Get the fuck out of here. Start right now. You're going to need that time, so let's do this. And if not, enjoy the free stuff. That's why it's there, guys. But you're going to spin your fucking wheels for years. Don't go the free route. Don't do it. If you're going to do that, you just fucking quit right now. Like, honestly, it's stupid. Work with someone that can show you. Okay, guys, have a great evening. I will see you tomorrow. Audi fucking os. Ciao.